Hello and welcome back to another week of your Mortgage Market Movers Weekly, where we are detailing everything that's going on in the macroeconomy to help you make better home buying decisions. This week's 30-year fix is sitting at a 5.98. We are finally below the sixes. So that is down from last week's 6.01. So we are going to get into everything that may be impacting the lower rates and anything else that might be going on in the economy. So let's get on over to the charts. All right, here we are back over to the charts. So we are on the US 10-year and it is definitely coming down now. So the US 10-year closed at like 0.4 basis points above 4. So looks like the rates are definitely heading down. We can see that the bond market is definitely starting to pick up. So bond market up, 10-year yield down, and interest rates typically follow suit. So yeah, everything's good on that end. When we get over to the economic calendar, let's see, anything this week that we particularly wanted to pay attention to. We had unemployment claims at 212. So labor is doing decent. There was a beat from the forecast for unemployment claims. I want to say one of the Fed members, Goolsbee, he was speaking, Tuesday. I thought I saw a headline stating that they are cautiously anticipating that rate cuts will happen this year. When we look at the probabilities for rate cuts, let's see, it is currently at 2 cuts this year. So one potential cut in July and then one potential cut in October is currently what is priced in. And then it looks like, I don't know, this is in 27 and this is so close. We don't want to say anything yet, but so it looks like rate cuts are probably going to come through. And let's see, last week we also got so we had GDP and that was pretty weak for a quarter over quarter, and the PCE actually was stronger. So inflation was worse and growth was also worse than anticipated. And let's see what else we had. So I was listening to someone say that one of the things that may be impacting the lower 10-year yield is the idea that maybe growth in the economy is going to slow down a little bit. So people are buying into the bond market to, I would imagine that's to maybe get, get the yield and be able to, get more bang for their buck than they could get in different economic investment tools, vehicles. But we'll see. So, as far as mortgages go, though, it's good news for us. So Friday we have a PPI. So this is the other half of CPI. And let's see, is this delayed? Yeah, delayed by 15 days. But we have core PPI. So this is the producer's inflation. And then let's see, what do we have next week? We have manufacturing PMI, services PMI. So this is going to let us know from the manager's perspective in manufacturing, how's manufacturing and services doing? Is it expanding? Is there growth there? Are there contractions? We also have ADP, non-farm employment change. So a little bit of labor information, unemployment, and then earnings, retail sales, and unemployment. So we have labor next week. And that's really it for this week and next. Really not too much on the horizon. I mean, there's important stuff, right? PPI is going to be important, and then PMI is important, and then labor, of course. But, nothing too crazy. I do expect to see this still trend down. This 10-year yield, maybe not, too far down below 4, but we might still hover around in this range. We really need to see, like I said, what inflation's looking like, what PPI is looking like. I think that's more important than the Fed, and that's kind of what I've been saying. But that's all we've got. So pretty short video this week. Like I said, 5.98, finally below the 6s for the average 30-year fixed. All right. And that's about all I got for you this week. If anyone has any questions, comments, or concerns, reach out to us at www.mortgagesbylinda.com or visit us at 877-TEAM-MBL. Let's see if, okay, I guess this webpage does not want to load. Anyway, there we are, mortgagesbylinda.com. All right, everyone, have a great week.